Hello, everyone. This is Coach Wade, and in today's video, we're going to talk about the cash flow quadrants. Before I do that, I just want to, go very briefly, just explain, our system to you. So pretty much, here in America, we live in a capitalistic society. All right. So you either capitalize on the system, or the system is going to capitalize on you. So basically, the way the system works here is that it's designed for folks that are self-employed. It's not pretty much geared towards those folks that are W-2 employees, but it's geared towards those folks that are self-employed and investors. Now, why do I say that, you may ask? The reason I say that is because typically those that work, trade hours in for dollars, typically pay more in taxes than those that invest and own a business. You own a business, you're able to take advantage of tax breaks. So the way it works is pretty much when you get the W-2, if you're a W-2 employee, you get your paycheck, and the first thing that comes out is taxes. So you tax before you even get to spend. Now, when you're a business owner, you get taxed on what's left. So basically, you get your money, you spend it, and whatever's left, that's what you get taxed on, right? And as an investor, the income that you're generating, those taxes are a lot less than the taxes you actually have to really work for, right? And it's all about understanding the game that you're in. We're in the game, again, of capitalism. And you know if you're being capitalized on or not. Nobody has to tell you. Now, I'm going to explain this to you. It got me wondering. It got me thinking, when I first heard this. But pretty much if you think about it, as an employee, W-2 employee, all right, first of all, the first 30 of your money is going straight to taxes before you even get to spend it, right? It's going straight to taxes. The next thing, we have our everyday expenses. We have our cell phone bills. We have our mortgage, our rent, late charges, late fees, all these things like that is eating away out of income. And then the last third of it is going towards big business because people think they have to have things they really don't need, we call this big businesses, right? So I think holidays and things like that, they were created the way it is right now. They're created to get you to spend. If you think about it, every month out of the year, there's something to celebrate. Okay. January, you have New Year's, right? February, you have Valentine's Day. March, you have St. Patrick's Day. April, you have Easter. May, you have Mother's Day. June, you have Father's Day. July, you have 4th of July. August, you have back to school special. September, you have Labor Day. October, Halloween. November, Thanksgiving. And December, Christmas. That don't even include birthdays and anniversaries. So all these things are coming after our money. And it's like, man, where did my money go? Where's it at? We just have to understand the game that we're playing. It's not saying that you don't have to celebrate these things or nothing like that, but just pretty much understand the game that you're playing. Because a lot of times when it comes to like holidays and things of that nature, people spend their last. They will go into debt to make sure that they buy that gift for somebody, going to big business, corporations, commercial companies, and actually spending everything they have and what they don't have in order to buy gifts, right? So just understand the game we're playing, okay? But right now, what I like to do is I like to go over the cash flow quadrants with you guys, so you can see how this works, okay? See how the cash flow quadrant works, and this is Robert Kiyosaki's cash flow quadrant, okay? So I didn't make this up; things already out there, but good information. So what I'm gonna do is I'm gonna go ahead and share my screen, and we'll go over the cash flow quadrants. Hopefully I can do this right. Share my screen. Let me click on this. Hopefully, you guys can see this. Let me do. Almost forgot how to do this from the beginning. Here we go. All right. So hopefully, guys, you can see this. This is the cash flow quadrants, and of course, on the left-hand side right here, this is where most people are at. They're on the left-hand side right here. Most Americans on the left-hand side. All right. So in the upper left-hand quadrant, you're going to have employee. And an employee pretty much just trade their time in for dollars. Okay, you clock in, you trade your time for dollars, all right? Then the S right here is so self-employed, all right? So self-employed means that you pretty much just own your job, So when I say own your job, it's like you're still trading your time for dollars because when you stop, your business stops. If you're a doctor, if you're a mechanic, you don't have employees, it's just you, sole proprietor. Once you stop, it's over. You're not earning the income. Or if you get sick, you go to the hospital, things of that nature, you're away for a long period of time, you can lose your business. All right. So that's his left-hand side right here. And guess what? This side is the side that's taxed the most, right? But of course, you got a little advantage right here as a self-employed because you have some tax write-offs. But still, if you stop, your business stops. On the right-hand side right here, for the B, you're going to have business owner. Okay, so as a business owner, it means you own a system or you have people to work for you. So no matter what, whether you sleep or if you're in a hospital, your business continues. That's big business. This is the business owner. You have a system in place. Right here, it has like little McDonald's right there, right? Mickey D's. I don't even think they don't even use that logo anymore or that character anymore. But anyways, that's McDonald's, right? So pretty much with McDonald's, those are franchises. It's a system that's in place. So irregardless of what the owner of that particular franchise is doing, that business is going to keep on going, right? It's a system that's already in place. All right, so the I down here, which has like a little cartoon character, Warren Buffett, this is investor. So this is basically when your money actually works for you. Your money is working for you. So investment, it can be anything. It's not just stocks, but stocks is one thing, right? It can be rental properties. It can be anything that's going to generate you an income, right? So that's an investor. All right. And again, with investment, the capital gains tax is a lot less. It's a lot less than the tax you have to work for, right? I'm saying work for because you have to work for taxes because, again, first third of your money is coming out in taxes as a W-2 employee. But as an investor, capital gains tax is taxed a whole lot less, right? So, right, again, most people in America are on this left-hand side. They're either employees or self-employed. So what hinders people most of the time from coming from the left side to the right side, so come from this quadrant to this side of the quadrant, is basically fear. Fear stands for false evidence is appearing real. People are afraid to take a chance, all right? But you have to invest in yourself. Be an investor, be a business owner, own a system, generate multiple streams of income. I mean, it's critical to have multiple streams of income. Whether you're looking at, again, flipping houses, or if you're looking at having rental property, or if you're looking at buying stocks or whatever it is, buying a portion, buying equity into a company, whatever it is, you want to get to this right-hand side. And you have to take chances again. Don't allow fear to hold you back from being able to maximize your potential. I mean, you have the capabilities of doing anything that you set your mind to. I know your parents have told you that. You do anything that you set your mind to. And I absolutely believe that 120%. All right? That you can do anything. You don't have to be stuck being an employee. You don't have to be stuck being self-employed. You can become a business owner. You can become an investor and generate generational wealth. So it's not just wealth for yourself for right now. You can generate wealth that can last generations. So your kids won't have to worry about a thing because you set the foundation. It all begins with you. All right. It all begins with you, and it begins with your mindset. Again, don't allow false evidences that appear real to stop you from moving within the cash flow quadrant. All right. So that concludes the presentation for today. But I hope you guys enjoy. Until we meet again, you all have a great day. And for those of you that are looking at this within the private mastermind group, I will put this slide in the description field of the video. But for those of you that are not a part of it, but would like to become a part of it, just give me a call, 706-478-7670. Again, that's 706-478-7670. And I look forward to seeing you guys at the top.